Hello everyone, great to have your company here on Kalkine TV. I'm Rachel and you're watching The Buzzing Trends. Now the main stock in the limelight today is Westpac. That says the bank announced a $3.5 billion buyback. Others in the Big Four ASX Bank Group, the Commonwealth Bank of Australia, the National Australia Bank and the Australian New Zealand Banking Group have announced their respective buybacks. Shares of Westpac are currently trading at $24.26. The buyback will be carried out via an off-market tender process, which will be open on the 17th of November and close on the 17th of December. Under the buyback offer, shareholders can sell their shares at specified discounts to the market price of between 8% to 14% inclusive and or as a final price application. The buyback is actually smaller than what the market expected it to be. The bank said the capital component will be $11.34 per share. The dividend component will be the buyback price less the capital component. Commenting on the share buyback, Westpac Chairman John McFarlane says, "Our improved operating performance and positive progress on our strategic priorities, including the completion of a number of divestments, have strengthened capital and allowed them to announce this buyback." It appears that the bank is in the early stages of restructuring that should help the bank correct its previous problems. Meanwhile, Westpac also announced its earnings for the full year 2021, and the bank reported a cash profit of $5.35 billion during that period. Even as the bank's cash profit fell short of expectations for $5.42 billion, it was twice as much as a year ago. Westpac reported a cash profit of $5.35 billion in financial year 2021. Now here are some highlights of the full year results. Statutory net profit was up 138% year on year to $5.4 billion, and cash earnings rose 105% to $5.3 billion. Cash earnings per share rose 102% to 146 cents, and net interest margin was down 4 basis points to 2.04%. Return on equity was up 372 basis points to 7.6%, and CET1 capital ratio was up 119 basis points to 12.32%. Westpac's CEO Peter King says he's pleased with the progress they're making to transform Westpac into a simpler, stronger bank. Credit quality has remained remarkably good, with stressed exposure continuing to decline off last year's peak, while mortgage 90-plus day delinquencies were also significantly lower. Here's a closer look at Westpac's dividend. Now, the bank almost doubled its final dividend at 60 cents, as against 31 cents a year ago. Meanwhile, the bank seems to be cautiously optimistic on the future and expects the Australian economy to rebound over the next 12 months. Well, that's all for now. We'll be back very soon with our Buzzing Trend Show to share the latest market insights with you. Till then, stay tuned to Kalkine TV for more stock, business and economy-related hot trends. I'm Rachel, signing off for now.